Hello everyone. Hope all of you are doing fine. Let me take you through the fixed income outlook for the month of June. We began the FY24 with an optimistic note, and the month of May was also rewarding for the investors. From global perspective, the month of May, the FOMC decided to hike rates to 5 to 5.25 with a mild tint of dovishness. The inflation in the US seems to be at the inflection point. Policy rates are just moving in the positive real rate zone. However, while the inflation is moderating, the GDP was much stronger, giving mixed signals and making incrementally tough for the policymakers to act. Overall, it seems the pause in the Fed target rate may be very close. Much debated deal on the debt ceiling is heard to be achieved. Hence, the risk associated with the debt default by the US is out for now. Inflation in the UK is still very high. Hence, the policymakers may need to catch up a lot before calling it a day on rate hikes. Now, let's look at the Indian side. Our inflation trajectory is running much below the projections by the RBI. Hence, the target of 530 for FY24 is likely to undershoot for the year. But the same will act as a cushion for the adverse impact on the monsoon, if any. GDP for FY23 is expected to surprise on the positive side. RBI delivered 87,000 crore worth of dividend, which was much higher than the budgeted. RBI also decided to withdraw 2,000 rupees note from circulation, which is about 3.6 lakh crore outstanding. Both measures will have a positive impact on liquidity. Hence, no other action such as OMO purchase or CRR cut will be needed to manage liquidity in the near term. We have MPC scheduled in June second week. Our base case is RBI shall keep rates on hold at 6.5 for now. While markets in the US are discounting a rate cut in September to December, Indian markets are reasonably placed with no such expectation. However, swap markets are discounting some amount of rate cuts for the next year. We have advised our investors to increase duration of the portfolio, and the same has worked well. We continue to recommend the same. Friends, we are near peak of rates and expect the yield curve to steepen with very short rates moving down. Investors and distributors somehow feel that there is no alternative for efficient investment option in fixed income. We would like to recommend investors to also look at hybrid options like arbitrage fund and equity saving schemes. Debt hybrid can also be considered by the investors who are in low or zero tax bracket. Investors with high risk appetite and seeking long-term investments may look at equity hybrid and balance advantage funds too. Thank you. Stay safe. Stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.